No doubt. All right, let's talk about York Freehold, Freehold pricing and the market there. So we did see a slight downturn there in median price. So we're down 0.5% month over month. Um, it's not what we usually see this time of year. That's been the big thing as we've been talking about the spring market is it just hasn't landed the way that it usually would. The statement I keep seeing is dead on arrival. And that's kind of how it feels for as we compare it to previous spring markets. So to see that slight decline there, not great, but we are seeing transaction volume slowly start to tick up a little bit. Not in the numbers that we're used to seeing, but it is ticking upwards. We did see median days on market come down a little bit month over month, but we are up 38.5% year over year. So this time last year, Freehold House in York was selling in about 13 days. Right now, we're sitting at 18 days on the
Yeah, I
market.
mean, we saw a nice 13% uptick in sales, but the problem
Yeah.
was we saw a 22% uptick in the new listings. And that's kind of why prices have been, down a 0.5%, just because the new listings is outstripping, that transaction volume, unfortunately.
Exactly. And so it's nice to see this uptick on a month over month basis, but you got to remember year over year, we're actually down 14% in terms of the comparison to the same time last year. So we're
Yeah.
still not where we want to be there. And when you look at the charts, as Matt was just saying, here's the uptick in new listings. It's funny, we had a little stall there for March and April. It did not go up too much. Everybody was kind of sitting on the fence there for a second with those freehold listings in York. We see a big push from April to May. But that big push with the lack of sales, this is what it does to our active listings. This thing is just on the uptick of a roller coaster. It's at the start of the ride, just going on a steady stream right up. We haven't seen any adjustment here to roll over in terms of those active listings. And the reason for that is our sales volume has not kept up at all with the active listings. So we're not removing enough inventory from the market. And again, we're only just outpacing our 2020 lockdown months, which
If you go
will,
back to
yeah,
the new listings volume,
yep.
this is typically where we peak out for new listings. So next month's going to be a very interesting to see, did we
Yeah,
accelerate even further to the upside?
exactly.
Because if we did, we're going to be kind of going into some uncharted territory where we're accelerating for the first time in 16 or 15 years
Yeah,
uh,
from
to
May to
the
June.
upside in June.
Yeah,
So that's something to keep an eye on for sure. Or do we finally start to roll over and follow the way it typically goes for the rest of the year?
yeah, yeah. Great point. I'm glad you brought that up because we are just seeing things that aren't trending the usual way. So here we are in terms of median sale price for freehold homes in York, and what we're seeing is it's kind of been holding steady. But what's important to note is we are below our previous 3 years. We are just hanging out just above 2021, and of course, look at that big gap from 2020. This is how quickly prices went up. Look at how close we are in these fields here. But from 2020 even just to 2021, that was the increase that we saw in median price, and
Yeah.
that's why this correction has felt bigger than some of the past. But we're cruising there, Matt. I think that we're coming up to a time where we're going to be below 2021 by September, for
Mhm.
sure.
Yeah.
If not
Yeah.
August, but September for sure. I think that anybody bought in those last 4 years in terms of median price, you're going to be looking like you're below the value that you were purchasing at.
Yeah. And
All right.
and to be clear, like I don't expect us to get anywhere close to where we were in 2020. There's just
Yeah.
far too much capital that was pumped into the market that still exists in the market. Um, and again, the government spending is going to make its way into the economy. That will stall out prices and then start to make them rise at some point. Um, I think it's possible it could be later this year. It's just going to depend on how many people renew their mortgage and are able to continue to afford it. Pay
Yeah.
has gone up. In 2020, the average hourly income in Canada was $31, $32. It's $37.50 now. So people's incomes have increased as well. And mortgage rates have come down a little bit. So I think there will be a lot of people that can absorb the cushion, but there will be some fringe people that don't. We'll have to see how much that is.
Yeah. Yeah, I think as we go through the year, you'll start to see where that price really started to accelerate. right? We had really high prices and we had really low interest rates. And coming into next year and the year after that, that's going to be the 5-year mark from those people that were at the peak. So anybody in that 6 to 12-month window is that fringe group that you're talking about that will be impacted the most in terms of the higher debt load that they took on at a lower interest rate that is now they're renewing at something that is probably double. Like a very common one I'm hearing is somebody that was just under 2% when they purchased, and now they're renewing and they're at 3.99 or 3.98. Is a story that I'm hearing quite commonly these days.
I was also speaking with a mortgage broker the other day who was saying there was a lot of people that took shorter term interest rates over the last couple of years, 1 year, 2 year, 3 year, and he's
Yeah.
been rotating a lot of them into mortgages over the last 6 months.
Yeah.
So I think some of those people have already started to put their properties on the market. Um, so I don't expect like the last half of the year to be this big massive push, but I think the trend could potentially continue for the rest of the
Could
year
be
at
there.
least.
Yeah. And then when we come into our months of inventory, we are looking at, sorry, my computer's in the way. We're looking at 5.83 months of inventory currently for our freehold market there.
Which is the highest it's been for quite some time.
Yeah. Yeah. Again,
That's
our
a new
charts,
high.
our charts for today going back to 2011, 15 years is a great span for you to understand what's going on in the market, especially as we have had our downturns here. We had our 2017 correction, and we had, well, we're coming off of the financial crisis back there in '09. So by then, look at how we were even just a couple years later in comparison to our 2022 rate increases to where we are now, right? All right. This is another one that we've been watching closely is just looking at the percentage of homes that are selling over the asking price. And we did roll over there in kind of March and April, and it looks like we're ticking up just a little bit there, Matt.
We're ticking up because I'm finding with a lot of the properties that I'm working with or have been involved with, if there's a lot of buyers coming through people's homes, but they're not
Mhm.
biting. And then when you decide to like maybe take 150,000 off the price and relist it, all of a sudden you're getting a lot of activity. All the buyers are starting to come, and you're actually getting offers right where you thought you were going to end up in the first place. So I think there is a little bump up here because buyers are sitting on the sidelines and going, "Hey, I got a lot of opportunity in here. I'm not in a rush." But if they fall in love with a property, you reduce the price, they then decide maybe I should act on
Yep.
this. I don't. That's the house for me in the location. I'd hate to see it go. And for some properties, that's what's happening, and I think that's
Yeah.
what's reflecting in the above list price. But in reality, it's going for market price or just below market.
Yes, exactly. Exactly. This is more about is a low pricing strategy working right now in the market and how the percentage of homes that are selling, how many are
Yeah.
using that strategy that are making it work. And Matt, you hit on something key. One of the challenges this market is seeing is a lack of urgency in the sense of buyers right now because they are spoiled for choice. There is some
Yeah.
uncertainty in the market. So there's no real urgency on their part. But like you said, if you've got a product that can move, you create that urgency by setting a date and putting a price attractive enough to get people through the door. And like you
It-
said, it's not that the home's going to sell for that much more than it would have the other way. It's more so you're just getting to market value, but you're having somebody come forward and say like, okay, I am going to act today because if I don't, I could lose this one that I've fallen in love with.
yeah, I think perceived value for a buyer walking into the property, if it's not there, they're
Yeah.
not biting. There's plenty of other options. If they walk through the front door and you've priced that property very well and competitive and also understood we're not even in a raising price market, we're in a declining market, the buyer is like they're seeing the value right away, and they're more inclined to put an offer in and get the ball rolling on that.
Yeah. All right. Let's talk about the different categories that we're looking at in terms of where a lot of these sales are happening, right? So what are the price points that we're seeing this in? And this has stayed pretty true. That million to 1.5 in York region is where we're seeing the bulk of our sales volume right now. And it's funny because that's just when we look at freeholds and how much prices have increased over the years. Like that's just where the bulk of them sit now. There was a chance, there was a time just a couple years ago where this was the townhome market,
Yeah.
that million to one too. So it's adjusted a little bit. You're getting your freehold detached two stories now in a lot of places down here, but nonetheless, this is still where the bulk of it is. But now, in terms of looking at our active listings, yeah, still makes sense. That's where the bulk of them are. But we have a ton of luxury stuff sitting there at over 2 million, which, funny enough, is our fourth biggest price bracket when it comes to the sales side. But when you look at months of inventory and the amount of options, there's over 1,000 for sale and 88 of them sold last month. So
Yeah, I think there's plenty of appetite for anything below 1.5, especially anything below 1.2. It's that 2 million plus market that's just getting hammered right now.
yeah,
And I think that's, you're starting to see the bulk of the inventory, the active listings in that group of houses, right? So I think, we've seen a nice steady um, line for where prices are. It's just that bulk of inventory, 2+ million, is what's getting churned out and turned down a bit
yeah.
in this market.
And it's interesting to see that we're seeing more growth here in the 1.5 to 1.8 in terms of stuff that's available, as well as coming through on the sale side. Because there was a time when you and I were breaking down the price categories for every area, we were seeing almost a missed gap there in that 1.5 to 1.75. It just was kind of overlooked. Like people weren't quite seeing the value on some of those properties. So
Yeah,
it's
I'm trying to
interesting to.
look and bring this chart over from last month. So we can see that the active listings for the 2 million plus has fallen. Maybe people have taken it off the market.
Yeah.
And even 1.5 million and above, we've seen some decreases in those as well. So I think some people are taking their properties off the market and just saying, hey, you know what? I don't really have to sell. Maybe we'll just stay put. But there's still a lot of people that have to move their property, and they're the ones that are still out there trying to get
Yeah.
something.
Or then they trickle down to the next price category below them there.